The headline said the lowest federal tax rate dropped from 15% to 14%. But for the entire 2025 tax year, you're actually taxed at a blended 14.5%. For someone earning right up to the first bracket, that gap costs about $287 compared to a full year 14% cut, according to the Department of Finance Canada. That's the promise, and here's exactly why the number on your return won't match the one you heard. In May 2025, the federal government announced its middle-class tax cut, dropping the lowest personal income tax rate from 15% to 14%, effective July 1st, 2025, according to the Department of Finance Canada. I read the fine print so you don't have to. Because it took effect halfway through the year, 2025 doesn't get a clean 14%. It gets a blended rate instead. The first federal bracket covers the first $57,175 of taxable income in 2025, according to Finance Canada. Until June 30th, that money was taxed at 15%, and from July 1st, it dropped to 14%. Finance explicitly states that to reflect a 1 percentage point cut coming in halfway through the year, the full year 2025 rate is 14.5%, with the true 14% only starting in 2026. This touches every Canadian with taxable income since the lowest bracket applies to everyone's first dollars earned. But the Parliamentary Budget Officer estimates the average tax filer saves only about $110 in 2025 to 26, not the hundreds many expected. The full 14% rate and the bigger savings on only arrives with the 2026 tax year, according to Bill C-4. Here's the math on the first bracket. At 15%, tax on $375 was $8,606. At the blended 14.5%, it's about $8,321 at a saving of roughly $285. A true full year 14% would have saved you $574, so 2026's cut is only about half of what the headline implied. Here's the part buried in the announcement. That lowest rate does double duty. It also sets the value of most non-refundable credits, like the basic personal amount, the spouse amount, and the disability amount, according to Bill C-4. So as the rate drops, those credits shrink too. The PBO found the rate cut alone costs Ottawa $9.5 billion in 2026, but the credit reduction claws back about $4.2 billion, quietly financing part of your own tax cut. Before I get to what happens next, which is the most counterintuitive piece of this, here's what to do now. First, confirm your 2025 first bracket rate is 14.5% up to $57,375 using CRA-aligned bracket tables. Second, log into CRA My Account and compare your 2024 and 2025 notices of assessment to see the real difference. Third, check your RRSP room and use contributions at your marginal rate to boost your savings. This is general information, not personal advice. Check your own circumstances. If this is useful, subscribe. The next breakdown is already coming. Keep this front of mind when you file. The clean 14% rate only applies to your 2026 income and beyond. Your 2025 return will use the blended 14.5%, according to Finance Canada and Bill C-4. Don't expect the full cut to show up this year. And here's the most counterintuitive piece. Finance Canada advertised savings of up to $420 per person and $840 per couple, but that's a 2026 maximum for those who benefit most. The PBO found the average filer saves closer to $110 in 2026, and someone in the lowest bracket sees only about $90 in 2026 and 2027, versus $330 for others. The benefit is real, but it's modest and skewed toward higher earners, so plan around the true number, not the headline. Next, I'm breaking down the 2025 RRSP and TFSA limit changes and how to use them to beat this small tax cut. If you want to catch that, subscribe so you don't miss it. I'll keep reading the fine print so the number you hear actually matches the number you pay. This is general information, not personal advice. Always check your own situation before filing.